We've got a big week of earnings ahead with more than 20% of the S&P reporting. And despite stocks near record highs, Bespoke notes that more companies have lowered forward guidance so far than have raised it this earnings season. Our next guest is skeptical of the everything goes up rally, and he's leaning in on blue chips and away from overconcentration with his Essential 40 portfolio that began trading as an ETF today. Here to discuss both the portfolio and the unloved names that it's holding is Jeff Kilburg, KKM Financial's founder and CEO and a CNBC contributor. Ticker, Jeff?
ESN, and thank you, Kelly. Exciting day for KKM Financial. My co-portfolio manager, Dan Deming. Very exciting day to be trading live on the NASDAQ.
That's great. Congratulations. Do you think the ETF revolution has officially... There's no debate anymore, is there, about ETFs versus mutual funds?
There's not, Kelly, but I think there's still a place for mutual funds, so I don't want to throw any shade on mutual funds. But I think if you look at the last 15 years, the continued growth of ETFs. At the close of 2023, Kelly, we saw about $20 trillion with a capital T still in mutual funds, but we are seeing about $8 trillion, a little more, at the end of 2023 for ETFs. So I think this trend really speaks to the volume of what investors want and what investors need. And I think when you look at the inherent tax efficiency in an ETF compared to a mutual fund, that's what really resonates, and that's why we converted our mutual fund to an ETF. If you think just, Kelly, in 2022, when the market was down, if a longtime investor in a mutual fund would have sold that holding, that would have created capital gains distribution where all shareholders would have unfortunately had to participate in paying the tax man. Structurally, the ability an ETF has in this in-kind creation redemption process, I know that's a little in the weeds, but if you can just understand the tax efficiency, it separates it. And generally, most often, ETFs pay a lot less in capital gains. So that's really important when you talk about compounding in taxable accounts. That's why you're seeing the trend continue to move towards ETFs, and that's exactly why KKM Financial moved the Essential 40 mutual fund into the Essential 40 ETF. I
think that's very well said and explained, and that is a core part of why ETFs have been so attractive. One of the, speaking of core insights, Jeff, it's, I remember reading a while ago that, you really only need 20 or 30 names to be diversified. And I've often joked that everyone should have like a family Dow Jones, just pick 20 or 30, we can't, but you all can. So in your 40, what's in your 40? Are they market cap weighted or how do you pick, or do you put weights based on, how much you like them? What's the biggest difference between that and the Dow, for instance?
That is the biggest common denominator that we have, which is very different than the market right now. If you look at the top 10 holdings of the market cap weighted S&P 500, nearly at 35%, we own 7 of those 10 top holdings, but our portfolio, Essential 40 portfolio, is equal weighted. So you may be familiar with RSP, that's Invesco's S&P 500 equal weighted ETF, but that holds 500 names. We own 40 names, so we try to have a modern day version of the U.S. economy. And if you think of these names, Kelly, these aren't necessarily names that you like and are popular, but these are names that you need. This is what the U.S. economy and the American way of life is dependent upon. So boring names. One of the best names in the portfolio, Oracle. Oracle doesn't get a lot of conversations. You look at 3M, Lockheed Martin, even a name like CME Group or Costco. Those are names that we don't talk a lot on CNBC about. We want to talk about the Mag 7. But these are names when you do see turmoil come into markets, distress come into markets, which we haven't seen in quite some time with all these new record highs. But those are important, and that's why if you think about Peter Lynch in the 1980s, if you remember his theme, Kelly, he was buy what you know. The Essential 40 portfolio, the Essential 40 ETF, is buy what you use. These are names that we deem critical to U.S. economy and the American way of life.
I've thought a lot about that lately with Netflix and the way it's rebounded. Of course, it made some changes as well. You've got Boeing and Intel, right? Just a little bringing in at the very bottom. All right.
Yeah, no, I mean, look, we have to understand, and that's why we get considered on the annual rebalance and considering new constituents and exiting a couple constituents. But Intel and Boeing, those are names we still deem critical. And if you think about, NVIDIA kind of touches everything from Google to Microsoft to Meta. Those are names we also own. So you have to be very understanding of what you own. And I think it's time to diversify, but equal weighted. Morgan Stanley's been talking a lot about equal weighting. This portfolio is equal weighted, Kelly.
Thank you, Kilburg. Good to see you. Congrats, Jeff Kilburg with KKM. And that's it for The Exchange. I'll see you next hour with Tyler for Power Lunch. Don't go anywhere.